In 2020, Nigeria further improved its tax reform efforts by building on the foundation laid by the Finance Act 2019. The Finance Act 2020 was signed into law on 31st December 2020 by former President Muhammadu Buhari and took effect from 1st January 2021. The Act introduced over 80 amendments across key tax and regulatory laws with the aim of A. Providing clarity and corrections to ambiguities, B. Offering tax reliefs and incentives to mitigate COVID-19 economic disruptions, C. Enhancing revenue mobilization and regulatory transparency. Some key legislations amended include Companies Income Tax Act, Capital Gain Tax Act, Value Added Tax Act, Personal Income Tax Act, Customs and Excise Tariff Act, Nigeria Export Processing Zone Act, Oil and Gas Export Free Zone Act, Stamp Duties Act, Tertiary Education Trust Fund Act. Newly established legislations also include Crisis Intervention Fund, Unclaimed Funds Trust Fund. In this video, we will break down the key amendments in the Finance Act 2020 by exploring what changed and what it means for businesses and taxpayers in Nigeria. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Let us consider the major amendments under each tax law. 1. Companies Income Tax Act. Primary agricultural production. Tax exemptions were narrowed to core activities like crop production, livestock, forestry, and fishing. Tax-free period incentives for agricultural businesses from the 2019 Act were rescinded. Clarifications and corrections. Management, consultancy, technical, and professional services. Withholding tax is final tax. Ancillary income from shipping and air transport taxed under general corporate tax rules. Leasing income subject to general taxation. COVID-19 reliefs. Minimum tax rate was reduced from 0.5% to 0.25% for 2020 and 2021 filings. Donations for pandemic or disaster relief became tax deductible up to 10% of accessible profits. Rates. Rental income and dividend are now tax exempt as long as they distribute 75% of their income within 12 months. Gas sector. No multiple incentives allowed for gas downstream utilization businesses. Non-resident companies. Non-resident companies required to file full tax returns with global and Nigerian audited accounts if they have a significant economic presence. New administrative penalties. Penalties were introduced for deliberate filing of incorrect returns. The penalty for failure to keep proper records is 100,000 naira for the first month and 50,000 naira for subsequent months. Other amendments. Small and medium companies can file simplified financial statements as audited accounts are no longer mandatory for them. The timeline for tax payment was reduced from 60 to 30 days. Software acquisition costs now qualify for capital allowances. 2. Capital Gain Tax Act. New filing deadlines. Returns and payments now due twice a year, June 30th and 31st December. Compensation for loss of office. Capital gains tax now applies only to payouts above 10 million naira. Responsibility for deduction. Companies paying compensation must deduct and remit the tax. Clarifications. Only ships and aircraft used in international traffic fall under CGT. 3. Value Added Tax Act. Incorporeal properties. Non-fiscal assets like intellectual property are now classified as services, not goods. Non-resident companies' obligations. They must register, charge, and remit VAT on goods and services offered in Nigeria. Clarifications. Land and buildings now clearly excluded from VATable goods. Expanded VAT exemptions include commercial aircrafts and parts, commercial airline tickets, hire of agricultural equipment. 4. Personal Income Tax Act. Significant economic presence. Non-resident individuals are now subject to Nigeria tax if significant economic presence exists. Commencement and cessation rules. Income tax now based on actual accounting periods, eliminating old overlaps. Gross income redefined for consolidated relief allowance. This now excludes non-taxable income and allowable deductions. Relief on life insurance premiums. This was reinstated as allowable deductions. National minimum wage exemptions. Individuals earning the minimum wage or lesser are exempt from income tax. 5. Stamp Duties Act. Electronic stamps. FIRS authorized to use NIPO's adhesive stamps. Electronic money transfer levy. A levy of 50 naira to be issued on electronic transfers of 10,000 naira and above, with 15% of the revenue going to the federal government and 85% to states. 6. Tertiary Education Trust Fund Act. Small companies exempted from the education tax if their turnover is less than 25 million naira. Industrial Development Income Tax Relief Act. Primary agricultural production. Small and medium-sized companies in primary agriculture are now eligible for pioneer status tax holidays. Customs and Excise Tariff Act. Excise duties on imported goods. Imports are now taxed similarly to local goods. Excise duties on telecommunications. Telecommunication services are now potentially subject to excise duties. Reduced import duties. Significant cuts on tractors from 35% to 5%. Transport vehicles of goods and people from 35% to 10%. Cars levies from 30% to 5%. 9. Federal Inland Revenue Service Establishment Act. Use of technology. Digital tools are now authorized for tax administration. New penalties. Penalties now introduced for breach of confidentiality and failure to share required information with FIRS. 10. Nigeria Export Processing Zone Act and Oil and Gas Export Free Zone Act. Filing obligation. Free trade zone companies must now file income tax returns per Companies Income Tax Act standards. 11. Companies and Allied Matters Act. Unclaimed dividends. Dividends unclaimed after 6 years must be transferred to the Unclaimed Fund Trust Fund. 12. Crisis Intervention Fund and Unclaimed Fund Trust Fund. Purpose: to finance national emergencies and crisis-related expenditures. Funding sources includes unclaimed dividends, dormant bank account balances, and budget allocations. In conclusion, the Finance Act 2020 reflects Nigeria's evolving fiscal strategy amid a global crisis. It strikes a balance between providing tax relief to support economic recovery while simplifying compliance. Key next steps for businesses include reviewing their tax positions to benefit from reliefs and incentives, ensuring compliance with revised filing and payment obligations, monitoring sector-specific regulations, especially for non-resident companies, telecoms, financial services, and agriculture, and preparing for digital-driven tax administration processes. Understanding these changes is essential for businesses aiming to remain competitive, compliant, and future ready in Nigeria's changing economic landscape. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.